Hello everyone, this is Juan Sarmiento and today is Friday, March the 17th. I have a couple of, well, let's say 4 potential candidates, but before I get to them, let's make sure we have everything in order with our existing trades. That is, we need to look at potential rollovers, roll-ups, roll-downs, or simple closures of existing trades. You can see that our account has been going up recently. Let's take a look at our account statement. And for the year, we have a bit of a loser. It was worse before, so that's relatively good news. Today is up 14%, 1,400. So that sounds good. Let's go then to each trade here and see what we need to close or roll over, etc. Starting alphabetically with AXP. You can look at them at your current account statements, account positions, and that's how you get to them. Okay, so let's go. AXP first. Let's look at a chart of AXP just to get an idea of what we would do potentially. Wow, that's a big drop. I guess it's part of the banking area sector, and despite the big jump in earnings, and this is exactly what we're looking for, the stock rides up after the earnings, which is good because potentially it could continue on higher. The volatility is low at the time of entry, and then suddenly it collapses, moves down, and the volatility spikes, and the effect is a good increase in the profits. So let's go to the monitor tab, account statement, and go back 10 days and say AXP here, and that will give us the order as we entered it. Okay, so here it is. All right, let's analyze that. Let's make sure we don't have anything else. Good. So it is pretty much what we entered, and there is a rollover from March 3rd to April. So okay, let's delete that, and you can see that the stock going down has made a little bit of a profit. And what we need to do here when the stock drops like that, if we believe that it will continue to go lower, we can simply modify the trade to make it still remain delta negative, or perhaps neutralize it in case the stock goes up. So let's go analyze. And how do I have 17 deltas. How do I neutralize my deltas? By rolling down my puts. What does that mean? It means that I have some outstanding puts and I just sell them and buy something at a lower strike price. How many am I going to sell? Well, only 2, because I have 4 long puts and 2 short puts. So 4 minus 2 equals 2. 2 outstanding puts that I could roll over. So this is what we do. Analyze rolling. And let's do 2. Okay. And the strike price would change from 180 to something more closer to current price. 155 sounds good. 155 puts, and the expiring should be the same, so June 16. So that's how you roll down your trade. And June to June, so we are buying. No, we're doing the opposite. We're selling the 180 and buying the 150. So let's analyze opposite. And of course, that will be a credit. And what is the credit? 1557. Okay, so, and then my deltas become slightly positive, not a lot. If the stock continues to go down, volatility will continue to increase, and we will get Vega gains. And as you can see, my Vegas are positive, 175, 76, 78, which means that I will make $176.27 for every 1% increase in volatility. And that could happen. We are very low volatility right now. So let's take a profit here. Confirm and send. If the stock reverses and goes higher, we will be fine too. The shorts are expiring in April the 6th, and there's plenty of time before that. So you can look at this at the Add Simulated Trades and see my position here. We have 20 days to the expiration of the shorts, so we have nothing to worry about. In the meantime, we're going to check the activity positions and make sure that we are very close to the mark, perhaps even lower than the mark in our ask. I let it sit there while I'm working on the other ones, and I would come back to it. Let's go to BP. Again, we'll go the same process. Look at the chart, and the stock has bounced after earnings. No, this is Adobe. BP. Okay, the stock did go down. The earnings came here, nice. The stock went up, and then it collapsed. And because we enter at low volatility, the high spike in volatility as the stock drops favors us. Let's go to the Analyze tab. Look at the risk profile, and that was my change on the AXP, changing just now, and that's great. Okay, here is my trade, and we have made quite a bit of money on that. Since the opening, 2,119. Okay, so what do we do here? My shorts expired, and they're right in the middle. Okay, do I want to continue on this trade? Do I want to close it? Perhaps you want to close it because the volatility is 40%. Okay, it could go even higher. So, big decision to make here. How about if we close half of our position and roll over the other half? Yeah, I think that's fair because 40% in volatility here on the shorts could go down. So let's do that, all right? Let's analyze closing. And double diagonal, okay? And it would just adjust. We're going to sell 14 of the long, 14, but of the short, we're going to buy only 7 back. So this will be custom. So let's buy 7 back, and that will leave us with half for it, okay? And then the half we simply roll over. But first, let's do this. It's a profit-taking move since the volatility has spiked nicely. Okay, we wait until that happens, and let's move on. Once it happens, then I can do the rollover, but not before that. Okay, so let's wait a little. CRM. This is our trade. And you can see that I already did a roll up on this one here. It's 185. See that? A roll up. What did I do? Well, I had 2 calls. I had 4 calls, but I obviously sold one and rolled up the other one. And can we roll it up even further? Yes, why not? You can roll it up to 90. 190. Analyze rolling. And what I mean by that is the one call, I can close it and buy something at a higher strike price. 190. Okay, there it is. And that will give me $265 if you want to do it. Let's take a look at the chart. Do I want to do it? Do I believe that the stock could go higher? You know, it actually could, because this looks like a fresh new high here. The stock pulled back, but it's coming back, and I think it's going to go higher. So you have to make a decision. Do you believe that? And are you risking too much? Well, the existing trade is 13 deltas. That's not a lot. Let's say if the stock dropped $10, well, it will probably increase volatility and so on. But if it goes down, up, it will continue to appreciate because we have 14 deltas. So I'm not really too keen on changing anything. What you need to look at is your expiration for your shorts, are you going to do a rollover? Well, let's look at simulated trades. The 14th of April, that's 28 days from now. So yeah, they're fine, no need to change them. Okay, if it was a week to expiration, I would think of rolling them over. So I'm not going to change that. Let's move on to PANW, that's Palo Alto Networks. And today's the 17th. They are expiring. Here the shorts expire next week. So you could roll those over. Yeah, that looks great. We have made a profit here, but now if you were to watch this every day, you could potentially do the rollover later. Right now they're very close to the middle, and a move in either direction would reduce my profit. So I'm going to do a rollover right this minute. Okay, so what does that mean? Well, I'm going to take my two shorts, my puts and my puts and calls, close them, meaning buying them back, and sell something further out in time. So let's say analyze rolling and double diagonal. Okay, so now we just have to change the date. What is the date? Well, 30 days to expiration, 28 days to expiration, 35 days to expiration. So you can choose between the 14th of April and the 21st of April. Let's choose the 21st of April, give us ourselves a little more time. And that will give me almost $7 back. And look what it looks like. Okay, it is more bullish because I was delta neutral and now I am delta positive. Let's look at the chart. Do I think the stock? Yeah, the stock could. Look at this. Yesterday was a big move and now it's sort of settling back. But my stochastic is pointing up. Yeah, it could go higher. Break out to new highs. That's just my quick and dirty analysis. I think it's wise to doing that. 25 deltas is not that big a delta, so it's not a big risk, delta risk. So let's create duplicate, confirm and send, and that will give us back $1,380. That we can use for other trades, but the trade itself, the basics or the nature of the trade is still the same. Okay, I keep those. I will go back and check all of my trades, but now let's go to STX. Okay, in this case, our deltas are negative. April the 8th, there is still 2 weeks to expiration, and my Junes, obviously I sold the put before, so it used to have 10 and 10, now it's 9. That's a way to take profits. Let's look at the chart. Do I think the stock is going up? Yes, the stochastic is pointing up and the TTM is pointing up. You can see this yellow and curving up. That's all great indicators. It fell below the Ichimoku cloud and now it's getting into the Ichimoku cloud and it's likely to go higher. So I could sell another put. Analyze closing, and this is a way to take profit because compared to the original price, which was $6.05, I'm going to sell it for $10.04, but I'm going to sell only one. Okay, and look at the deltas. It went from negative to positive, and that's because I believe the stock will go up. But if I'm wrong, I'll be fine. Say the stock collapses from here and goes to 48. Well, great, because now I would have volatility and delta on my side. But if the stock goes up with this negative delta, I'm going to lose money. So I'm going to correct that. Take some profits and free more capital for other trades. Okay, and finally TSM. And TSM looks like this. Obviously, that was the STX that filled out pretty quick because it's a single order, not double order. So that's good. We'll be back to that. And look at this position. I'm going to unlock this And that gives me an impression of my total profits in this trade so far, and that's great. All right, so I could close this. Yeah, what if the stock rallies up? Well, okay, I think I'm gonna close it anyway, or I could close half of it as well. There's no strong movement in either direction, yet we have profits, good profits. If it goes sideways for too long, I might lose my profit. So I'm going to close it, right? I think volatility has gone up to 40%, and I think that the stock will go sideways. So I have the order already here, because all you have to do is copy your trade, put it here from the account statement, add all your things, correct the order for all your credits, and it will give you this. And then analyze the opposite, unlock it, and that should give you the price, the current price for that trade. Show all and deselect your initial order, and you should have a flat line. So that means if I execute this trade, it will close everything and leave me a flat line. Okay, that's what I want. So confirm and send. All right, and that's the end of our corrections. Okay, so I'm gonna let those work a little. In the meantime, let's look at new trades. All right, I have selected a few trades here. Let's cover them, the ones that work and the ones that don't. Start with Adobe. Adobe, you can see my trade here. I'm gonna copy that and paste it here. You can open this little widget here and say paste right there. And that copies my trade, analyze trade. Okay. So the same way, from here, you can copy it from here, copy that trade, and put it into your spreadsheet for future reference, okay? You make sure you copy it from the Analyze tab, because if you copy from somewhere else, it might not work the same way. But now you copy that and take it. Remember how to create this trade. Well, this is 2 straddles, okay? Let's look at a simulated trade. You come over here, you select the month that you want to sell. In my case, I'm selling the April 21st, 35 days to expiration. Look for the current strike price. That will be 357. Okay, 355 will be good. So then click anywhere and say, right click and say analyze by straddle. Well, actually I wanted to sell, so let's do that the other way. Analyze sell straddle, and that creates my straddle, my short straddle. The long, I go to June and I select the same strike price, which will be 355. This time 355, there isn't such a thing, so I'm gonna change this to 50, because in the back month there isn't 55. Okay, so let's change it to 50. Now here I'm going to say control, and say analyze by, and say straddle. And by doing the control, pressing the control, it adds it to our current trade. Now we have a 11111. I'm going to, that's a trade that just filled, the TSM. Okay, so here I'm going to add for Adobe another long straddle. Control key and press by, analyze by straddle. Bingo. And that creates my trade exactly as I was proposing it. Okay, except that I have July for the other one. Okay, how about we try July then? Okay, so we have a July and we have an April. Now you can create copy trade, or you can say confirm and send. You can save it, or you can create let me see how I'm forgetting. By creating duplicate, you see, now you can click on this icon here and then create your Genie trade. And that's your template for future use. That's how I create my template. I have created that before. So it's very simple to create the template. Now I don't have it. I go over here, go to June 350, and I right click and say buy custom. Oh, it needs to be on the trade tab now. Go to the trade tab and scroll down to June 23rd, 350. Again, right click and say buy custom, and presumably you created your Genie trade, and that's your template, and then analyze trade. Okay. And now that's Adobe, and let me show you the trade that I had selected was a July. Okay, here it is, July. So I'm gonna copy it. Now that I have it, I can copy it and put it exactly the way I want it, because that's the one I evaluated. Okay, let's move on. Now you know how to do this. I'm not gonna stop explaining that anymore. All right, here's the trade, and you can see my deltas and so on, my volatilities and so on. All right, so let me just analyze this in my spreadsheet. I'm going to do one of these exact same expiration. I have made note of the expirations for the longs and the shorts and the number of straddles that each one. This will be -1, okay? It's negative. And the other is positive, because the one closer to expiration, the front month as we want to call that, is negative, and the other is positive. And the cost is $8,640. Expensive, isn't it? Well, you need to just make sure that is 10% of your account. Otherwise, don't even try it, okay? Because then your risk is too high. And we have $99,000 in that account, so yeah, we can do that. So I have it as qualifying at this level. Just buy the one lot. Okay. Then we have earnings. Earnings should be better than 10%, and in this case it's 28%. What do I mean by that? Go to the Analyze tab, chart, and Adobe. You see here, hover over the earnings, and you see that the earnings is 2.967 was the estimate, and it came at 3.8. And I make that calculation here, and the difference is 0.8 divided by the actual, and that's 28% of improvement over the estimate. And that means trade, because if it is more than 10%, fantastic, it will show as a trade. Then I go to the trade itself. Is this a good trade? Here is the trade. Let's copy that to the Analyze tab. Analyze trade. Of course, I already had it, but I'm going to copy this, the volatility of the front month and back month options, and I have written them down here. Okay. Hey, it's changed since I opened this. Now it's 39 here for the July. I think still good enough, as long as it's not 40 or bigger. Okay, so yeah, that works for me, and it's acceptable as long as it is below 40. And you see the difference. I calculate the average for the back month and the average for the front month, and the difference is 0.335. If it is more than 5%, meaning 0.5, more than 5, more than 0.5, sorry, I see, more than 5, sorry. If it is more than 3, like 5 or something, it's not good. It would not be tradable. But in this case, it's merely 0.3, so 0.335, and so that says trade. You see the formula says if it's greater than 3, do not trade. Otherwise, trade. And then the liquidity is very simple. All you need to do is say create duplicate order and compare the mid versus the natural on your trade. Here at the bottom of the chart where my arrow is, okay, you see 87.20 versus 88.5. The difference is, when I calculated it, was 1.4%. If it's 3 or more, then you forget it. Okay? Let's say more than 3%. I guess I will accept 3%. And then here is the current IV percentile. For this, go to the trade tab, active trader, all products, sorry. And in this case, what do we see? That the current IV percentile is 13. If it's less than 15, it's a trade. Great, so I'm gonna trade it because all my conditions were met. Of course, needless to say that you need to see the stock jumping. I want stocks that are just going up like crazy, especially after news, after earnings. So a 10% increase over the news is already in my, I explained it last week or the week before, that if it is a stock that is jumping 10% and it fits my scanning, then great. This is one trade that I want to trade, and that's Adobe. Okay, so let's enter my trade now, confirm and send, and we wait until it gets filled. Okay, let's look at another one here that I have in mind. Amazon. Well, Amazon didn't quite make it because you see, do not trade, do not trade. I'm not going to spend time just to say this is the trade I suggested, but as you can see, Amazon actually came down. Earnings were less than expected, so I do not trade that for that purpose, for that reason. And then the current IV percentile was 22, so no, not good. Turns out that the volatility skew is fine, but the back month options are also a little on the expensive side. We accepted that for Adobe because the other conditions were good, but in this case, it's just one more aspect of it that I'm not too happy about, so I move on. Then we have Google, and in the case of Google, it's the earnings that didn't make sense. But you can see that the other conditions are met. So let's take a look at Google. Why did I was interested in Google? Okay, look at the move. After earnings, the stock fell, as you would expect, but look how it rallied up after that. Even after earnings, it went up, but it fell with the rest of the market, and now it's rebounding. Okay, volatility is low. I like that. You can look at the earnings, but it's becoming less relevant now that it went down, corrected, and now it's coming back up. Okay, you can look at the news if there is anything good about it. Okay, they may have had some new source of income or something like that. Okay, so I like it and I want to enter it, but feel free to go through this and leave your comments below, whether you believe that's a good idea or not. You are looking for a reason to enter this, some reason for this big jump that would suggest that they have earnings in the future their earnings will be good, or some sort of revenue that we weren't counting on. Great. So here I go. I copy my trade from here, and I'm going to assume that you would do this with the spreadsheet, make all the calculations necessary. If you need the spreadsheet, let me know. Okay, I'm going to put it here. Here it is. And you can see the bid and ask. So let's analyze that. How many do I want to enter? Well, you enter about 10% of your account. Right now it's 2417, which is 2400 because you multiply by 100. So when you create this trade, say create duplicate order, confirm and send, you can open it, unlock it so it goes to the 24, the mid side of it, confirm and send, and then you say multiple accounts, because then you can control the amount of the quantity of lots that you buy for this until it reaches about 10% of your account. It's an easy way to think about it. Okay, 4 of them will cost me $9,628, which is definitely below 10% of my account value. Send that off, and then we wait. And then the last one is LEN. Let's see what we have. Yeah, LEN is a little bit of a liquidity issue here. Okay, when you see that the mid is 21 and the natural 22, that's divide that by 22, it gives you 4.5%. So it says do not trade. However, I'm very motivated because the earnings was an earnings beat and the volatility is acceptable and the current IV percentile is at the lower end. Okay, so despite the liquidity issue, I think I want to trade this. The only problem you find when there's a low liquidity is it's going to be hard to get in and get out of the trade. So unlock this here, create duplicate order. At least you would enter some, let's say confirm and send, multiple accounts, and then here you say, okay, I can do 4 of them. Great. If 2 fill, then you're happy. Okay, let it be easy. If 1 fills, happy. If you put the trade in, it doesn't fill, then well, be happy too, because it might be harder to get in and get out, and you don't want that. Make sure you do it at the natural. Send that off, and let's see how it goes. Now we can go, what I would do is go back to my monitor tab and adjust my trades so that they get done. So for example, BP, credit 7.8, well, that's above my ask, so it should fill. The PANW is below. I mean, my limit is above the mark, so I could really adjust to that. So cancel, replace, and unlock it, and that reduces my credit. And do that until it gets filled. You want it filled because you want to get out of it. Okay? And keep doing that until they all get filled. In the case of the Adobe, well, I'm asking now less, I'm bidding now less than it's been asked for. So you need to adjust that. Cancel, replace, unlock it, and send. And then you do that again for a few minutes until it gets done. In my case, I will do it until it's filled. I don't understand why I have 2 Google trades here. Better cancel one of them. Okay, not sure what happened there, but okay, as you can see, my bid is higher than the ask, so that should be okay. The LEN is the one that didn't work. Perhaps I send a Google instead of LEN. That's what happens. That's what happened. Good thing okay, let's look at. Let's look at the LEN here. Let's copy that. I don't know what I did. You probably see it in the video and are yelling at me for being so stupid and not noticing. Okay, let's just put it here. Yeah, I sent 2 Googles. Thank God only one of them filled. Otherwise, I would have too much LEN. Okay. Confirm and send. Yeah, I don't know what happened there. Okay, so the Google filled, Adobe is still pending. The LEN, I said I was going to leave it alone, see what gets filled at that price. Okay, BP is above, this is below, so I'm going to drop it again, cancel, replace. There, confirm and send. And I will get this done before the end of the day, all of them. The only one that I can't guarantee that will get done is the LEN because it's a low liquidity one. Okay, I still am motivated to do it, so we'll see. The Adobe is still going up, so cancel, replace, unlock, and set. And with this motion, you know, you keep on unlocking, and sending a new trade, it will get done. Again, we have this, yeah. And as you can see, the Google did get filled and others got filled. So I'm going to keep trying until this gets done. Thank you very much for joining me. See you next time. Bye-bye.